All right, everyone. Stocks decided to go ahead and reverse once again intraday. That is 3 sessions in a row, and I know that volume is below average, but this now opens us up to a potential much larger pullback that could see us easily pull back to the 50-day moving average in those March lows in the Nasdaq, and I would definitely think that that's going to be in the cards here, which is actually going to be a better setup for us on the long side if the volume continues to come in. However, if more stocks start to look like Facebook looks and they start to sell off on heavier volume, you can forget it, and we'll probably have to start looking to exit a lot of these long positions. Like I said, what do you expect when you get a rally straight off the February lows on no accumulation whatsoever? You can't just keep on going up in a V-shaped manner. So this is actually healthy for now. It could get much worse, and I have a feeling it probably is. So before we go any further, I'm throwing up a hedge position in VIIX. It's producing its second pocket pivot point signal in 3 days. It's lesser risk overall than UVXY, TVIX. I still have about 20% cash, a little bit larger than that level overall. So, it isn't terrible. Normally, whenever shit like this happens, I'm normally 100% invested. So, that ain't too bad. And plus, the other thing is that on most of these longs, the lost dollar amount is going to be so minimal that they literally would all have to fail to do any kind of decent dent to the portfolio. And if that happens, what are you going to do? It's been a difficult market since the beginning of December 2015, and that will continue on an end-of-day trend following basis until we get some more proper volume and price patterns in the overall market. Like I said, though, the good news is volume was well below average today. It was heavier on the S&P 500, but lower on the Nasdaq. There was no increase in volume on the ETFs either. The only problem is that on some of the inverse ones like SPXU and SDOW, and UVXY, VIIX, some of the, more like hedging ones, HDGE actually didn't get any of those, so that's good. But you can see that you're starting to get, a little bit of volume here on some pretty good support levels, which is why I think that we could easily continue to pull back. So VIIX, ETF scan, 1%. 1% in price volume BOP scan confirmation, so there's going to be a 2% position. First sell stop will be a move below the 4.7 low a day. Second and final sell stop with a move below the 4.4 intraday low a day. That's it on the long side. Obviously, there were no new long positions. The good news is that stocks are still setting up. IESC, very tight volume contraction, volatility contraction pattern. Putting up the wrong one. MLNX, volatility contraction pattern. BR, volatility contraction pattern, and tons of pocket pivot point signals. So all these stocks could still break out. And of course, gold stocks are still rocking. RGLD made the perfect speculator scan today. Also, HCA made the perfect speculator scan today. And TLP. So there's still some options out there. But like I said, got to have price close to the 5200-day moving average. Got to have price touching the 20-day moving average. And I got to see the 10-day above the 20-day moving average, and preferably the 5 above the 10. If that's not the case, I'm definitely going to continue to hold off on new long positions until better setups arrive, because I've tried to cheat on some of these, and at this point in time, gains should have been produced. Large gains should have been produced, and even though the chart patterns still look okay, there's some internal weaknesses showing up, like in some bank stocks like MNRK, PACW. Slightly good news is that Goldman Sachs is holding on so far to that 50-day moving average failure, but another intraday reversal today took it back below the 50-day moving average, and with earnings coming up, bank stocks do not look that good, and however bank stocks trade is how the market's going to trade. So I'm very apprehensive here. I'm not that bullish anymore. We're still under a operational buy signal across the board, but definitely there's some problems arising. There's been a couple of distribution days. The NYSE now has 3 clear distribution days, 4 really if we call it churning, and just the poor intraday action the past 3 sessions off strong opens is just a telltale sign. Or a weak open on Thursday, but still weak trading all throughout the session. Gap up on Friday, weak close. Gap up today, weak close. Not good at all. But on an end-of-day basis, only had 2 sell stops really triggered. UA is a 50% sell signal with it closed in below its 20-day moving average on extremely heavy volume. The final sell stop is still very close behind. It's at 40.63. I'm thinking about just going ahead and raising everything up to today's low a day But right for now, I have it split up 50%. Today's low a day, which is just a hair away from my final sell stop. So that's why I think I'm just going to go ahead and move it up. UA needs to reverse immediately right here. And same with UAC class shares, which I doubt are on here. Oh, they are finally. So my final sell stop with UAC is below 40.97 now with those positions. And then the only 100% sell signal was Kate Spade & Company. Already been knocked out of it, but it is a full sell signal on an end-of-day basis. Besides that, not much else. SNE got to raise some sell stops. Graham got to raise some sell stops. JBSS monitoring sell stops. PFGC raising my one. I had 2 sell stops, one here, one there. The final one now is just being raised to here. If it would have closed below the 50-day moving average on above average volume, you would have seen 1 sell stop here, and then I would have held that big final one. But for now, I don't want to see it move below there. I really had a lot of high hopes for this name too. So the mere fact that once again I get some of these great signals in higher quality names and they're not following through immediately with big gains, huge freaking red flag to me. And then the speculative names like PZE, like I said, following this session right here, it should have exploded higher immediately. Now I know it's still basing, but the problem is shouldn't have done that. And Graham did, like I said, remember I told you Graham and PZE, those were the 2 speculative stocks with perfect chart patterns. Graham, worked today. Saw it up 26% today. However, the previous 2 sessions shook us out of half of it. Originally, the first sell stop was 377, but following the move on the 7th, raised up to 381. Would have been knocked out either way the very next day on the 8th as it traded down to 366. If it would have traded 1 penny lower, I would have been completely knocked out of Graham ahead of today's 26% move. This is not a sign of a healthy market. I don't give a damn what anyone says. I don't give a damn about anybody bragging about their gains since the February lows. It is just not a healthy tape. We don't have enough stocks that are producing 20% gains in 2 weeks. In 2 weeks of time, we should have had a handful of stocks up at least 20%. The fact that FPRX is the only one and that it took Light 2 months to do 25% gains, and that CLR is still our only big winner since we went long at the end of February with a 58%, at the middle of February with a 72% gain. Just huge red flags to me. Market's not healthy, needs to pull back, needs to base out. We'll either break out or we'll roll completely over. I'm ready for either way. Monitor your sell stops. It's time to add some hedges, and then we'll see if we want to reset up. But IEC, that kind of stuff, as long as that these kind of setups are still out there, there's still a lot of hope. But I'm not a big fan of hope.